Hello, this is the Chart Profit video. We are about 1 hour before the open, Thursday 29th of December. This from the pre-open today. Been in a pretty tight range for the last 9 days. In fact, all of the price action on the E-mini S&P that you're looking at here has taken place within the range of Wednesday the 14th. I mentioned here that yesterday's price action, that's Wednesday's price action, was pretty negative. We have this level here at 22.59. which is the 3-month point of control, the controlling price of the last 3 months. Yesterday's value area here was generated entirely below that level, and in fact this red here I marked aggressive selling yesterday, and we last marked aggressive selling on Wednesday the 14th. That's why pre-open Thursday the 15th I wrote that even so, with red being marked on the 14th, new longs are eliminated for me, at least until significant buying. That's green is marked again. We haven't seen significant buying, green marked, since I wrote that. So we have a few minor negatives here. Pulse chart looks like this. Here we can see this red bar here indicating the aggressive selling marked yesterday on the E-mini. We have a divergence here with the momentum indicator and price, which we've been mentioning over the last couple of weeks, and we do know that this indicator, this momentum indicator at the bottom here, the daily price oscillator, when it turns down as it did here and here from an elevated level and over here, it has a tendency to get back to zero, and possibly that's what we're looking at here. Although the price oscillator being above zero indicates, from my criteria, that the trend of the market is still up, and of course the breadth here is still green, so this is supportive. It's just in the short term we have these divergences, and now we've marked aggressive selling. So that breadth line on the pulse chart comes from these two bottom indicators here, which are holding above their levels. On the net volume percent 10-day moving average, this indicator here, you can see again with breadth here the divergence with price action. Also said that the Ridex ratio has also been a concern. So if we look down here under the sentiment, Ridex assets ratio, or my version of the Ridex assets ratio, was higher again yesterday, 11.72. That is the highest reading since early June 2015. So you can see over the last couple of weeks, few days here, since mid-December, there's been quite a rapid rise in the Ridex assets ratio, up to a level not seen since back over here in June 2015. We're now seeing both the bear fund assets at their lowest level since about that same point back in June 2015, and bull fund assets, if we look at those in isolation as well, have risen pretty rapidly over the last few days, again up to a level not seen since the start of the year. So optimism, bullishness has increased pretty rapidly over the last couple of weeks. You can count that as a negative along with this divergence. And now again the aggressive selling marked yesterday here may indicate the market wants to take a breather here, looking at the optimistic side and looking for safe buying level. If we look at this 3 month here, as long as the 3 month remains at 22.59, if I mark significant buying above that level, that would be a real positive. And down to our first level support at 21.59.50 here, the 6 month point of control. Should we see that tested and held and then significant buying marked, again that would be a positive. Current levels, probably want to see one or the other, otherwise anticipating further weakness here. This is a live chart of the E-mini S&P on an hourly basis. Here's the level 22.59 and the short-term price below that level, which is currently a weak price location. Looking here at the Russell 2000 ETF IWM, just plotted a 14-day RSI there. Again, you can see the divergences coming through here. And that from a very high overbought level, close to 80. Quick review of the supporting charts. This is the T-Bond ETF, TLT. We've got the major here that we've talked about, 117.15. So far the bonds ETF has held that major support level up a little bit yesterday. Just mention again that price below that level, 117.15, time printed down here would be a worrying development for bonds. Let's hope this major support level holds here. GLD, the gold ETF, up a little yesterday, you can see here. Personally, I need to see GLD from an investment point of view quite a bit higher above this level here, which is the halfway point off the low, important major low over here, which comes in, the halfway point comes in just below 116, 115.5. Personally, from, as I say, from an investment long-term point of view, I want to see price at least back above that level, and preferably above 119.84, which is the major point of control. Unless, of course, this moves lower, which it hasn't yet. As long as USO, the oil fund ETF, as long as that holds above 1078 here, which is the major point of control, it's in a strong price location. Mentioned last week that the 12-month value area higher comes in here just above 12, and that based on this, or the distribution of which this level here, 1078, is the point of control. Unless this migrates, which it may well do, this value area high just above 12 may be a problem for the chart, but with time at this level here, we may see that major move higher. Hasn't yet. On the dollar index chart, this level here that we reached last week, the highest level since April 2003, just here. Although the 14-day RSI has been really overbought and diverging with price action, index is still pretty close to that high. Euro FX chart recently printed its lowest level since early 2003 down here. Have no local levels to key from, but I do have a target if it remains in a bearish trend here of 1.014 down here, based on current distribution. Pound dollar chart, we have a 10-month point of control here, 124.19, currently printing below that level in a weak price location. There's a half range here, approximately 120.50, calculated from this October low over here to this high. Maybe some support here. Price below that level would be an extremely weak price location and actually suggest a retest of this low. Price back above 124.19, the 10-month would indicate further strength. Currently not interested in the long side of this chart. Australian dollar in a weak position below this halfway point off its low earlier in the year. That halfway point around spot 73.30. We had some support here. We broke below that level in December, puts it in a really weak price location down here. From those last three charts we just looked at, all in weak price location, looks pretty good for the dollar still. Okay, nearly all the sentiment indicators unavailable at this time. They'll be updated in the ebook, which will be available early next week. Right now that concludes the video. Thank you for watching.